Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and we're glad you're joining us today. We've got a packed show for you, with some significant developments in the financial markets that could impact your portfolio. First up, let's take a look at the current state of the US dollar. The currency has been drifting over the past 24 hours, as investors ponder the implications of President Trump's latest criticism of the Federal Reserve. The president has been vocal about his dissatisfaction with the Fed's monetary policy, and his recent attack on Fed Governor Lisa Cook has raised concerns about the central bank's independence. This has led to some uncertainty in the markets, with traders wondering what this might mean for interest rates and the overall direction of the economy. Now, we know that the Fed is set to meet next month, and there's been a lot of speculation about whether they'll cut interest rates. The market is currently pricing in an 82% chance of a 25 basis point rate cut. But some analysts are cautioning that we might not get the dovish signals that investors are hoping for. Jerome Powell, the chairman of the Federal Reserve, is set to speak at the Jackson Hole meeting on Friday, and his comments could provide some much-needed clarity on the Fed's plans. Will he push back against market expectations for a rate cut, or will he hint at a more dovish approach? We'll be keeping a close eye on this story and bringing you all the latest developments. It's also worth noting that the US dollar's stability is being watched closely by investors around the world. A weaker dollar could have significant implications for global trade and economic growth, so this is a story that we'll be following very closely. We'll be discussing all of these topics in more detail throughout the show, and we'll be joined by some expert guests who'll provide their insights on what it all means for your investments. So stay tuned, folks. It's going to be a fascinating conversation. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're halfway through our program, and I'm excited to dive into our middle segment, where we explore the latest news and developments from the world of finance. Today, we're looking at a slew of stories that caught our attention, from earnings reports to market trends. First off, let's talk about Home Depot's quarterly earnings. The home improvement retailer slightly missed Wall Street's expectations, but still managed to reaffirm its guidance for the year. This is interesting, given the current state of the U.S. housing market. As we've discussed before, the housing slump has been a concern for many investors, and it's worth noting how companies like Home Depot are navigating these challenges. We're also seeing some notable movements in the stock market, with a rotation towards lagging sectors. This could be a sign of a broader rally, but as always, we need to keep an eye on earnings and Fed policy to see if this trend will continue. Our friends at Yahoo Finance have been covering this story extensively, and it's worth checking out their analysis. In other news, Medtronic has appointed 2 new independent directors to its board, following a stake taken by activist investor Elliott Investment Management. This is a significant development, as it shows how companies are responding to pressure from investors to adapt and evolve. And finally, we have some exciting news from the world of tech, with SoftBank announcing a $2 billion capital injection into Intel. This is a major vote of confidence in the U.S. chipmaker, which has been undergoing a turnaround effort. These stories all highlight the complex and ever-changing landscape of finance. As always, we're committed to bringing you balanced and unbiased analysis so you can stay informed and make smart decisions. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up today's episode with a thought-provoking discussion on wealth and financial freedom. As we've been exploring throughout this show, achieving financial stability is a goal for many of us, but what does it really mean to be wealthy? We've been looking at some interesting statistics and expert insights that shed light on the different levels of wealth in America. From the upper middle class to the top 10% of earners, it's clear that having a high net worth doesn't always translate to feeling rich. In fact, many individuals with significant assets still don't feel like they have the financial freedom they desire. One expert we came across suggested that $2 million in net worth, excluding home equity, can go a long way towards making your time your own and relieving money-related stress. However, another expert argued that even $4 million or $5 million may not be enough to feel truly wealthy, especially in high-cost areas like San Francisco. So, what's the takeaway from all this? It seems that feeling rich is not just about having a certain amount of money, it's also about having abundant financial freedom. It means being able to make choices without worrying about price tags or living paycheck to paycheck. Ultimately, achieving financial freedom requires careful planning, smart investing, and a deep understanding of your personal financial goals. As we conclude today's episode, we want to leave you with some food for thought. What is your definition of wealth? Is it a specific dollar amount, or is it something more intangible? Whatever your answer may be, remember that achieving financial freedom is a journey, not a destination. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.